it's going to dwarf the existing system. There's 500 million crypto brokerage accounts. Younger people have zero chance of getting up the ladder. The median 401k in the United States of a baby boomer is $150,000.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul Pal will talk about the incredible opportunities in crypto that can truly change your life. Let's catch him up to discover how to secure a better financial future.
The issue is people have this anchoring bias on price. So they think 100 is more expensive than 1. But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number. Look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make 1,000,000x returns. The world doesn't work that way. It works, Bitcoin is really the anchoring for the whole space. And over time, right, this space is a $3 trillion asset class today. If I extrapolate the trend rate of growth of adoption or price or market cap, you get to somewhere like 100 trillion by 2034, 10 years. So we're only 3% of that journey. Mm-hmm. So is it expensive or not expensive? It's probably very cheap. And at every point, and I've been around this cycle, I've been in crypto since 2013, everybody thinks, oh my God, I'm paying the high. And when you look back, when I paid the highs at 200 back in, well, it actually went up to 1,000 and went back down again. Back in 2013, I'm like, I paid the highs. And then I look back now and it's 100,000. That's the thing about exponentiality. People don't understand. They see the cyclicality, but they don't understand the secular exponential trend.
Bitcoin has recently experienced significant turbulence, marked by substantial liquidations in the futures market. Since December 5, the cryptocurrency has endured 2 separate events where over $1 billion was liquidated, causing its price to fluctuate dramatically. One notable crash occurred on December 9, when Bitcoin fell from $101,430 to $94,200, erasing $2.9 billion in leveraged positions. Despite this volatility, the shakeout in the derivatives market is setting the stage for a potential rally to unprecedented levels. The health of the Bitcoin derivatives market has improved significantly, thanks to the reduced influence of excessive leverage. This shift is evident in the decline of aggregate open interest in Bitcoin futures, which fell by 8% from late November to mid-December. Additionally, the perpetual contract funding rate, which had peaked at 9% per month on December 5, flattened after the market correction. This indicates a washout of over-leveraged retail traders, leaving room for more stable growth fueled by institutional accumulation. Investor sentiment is bolstered by robust inflows into Bitcoin exchange-traded funds, ETF, in the United States, which have added $15.2 billion in assets since October. Major players like MicroStrategy, Riot Platforms, and Marathon Digital have also increased their holdings. MicroStrategy alone acquired over 21,000 BTC in early December, investing $2.1 billion. These developments signal confidence among institutional investors in whales, who continue to position themselves for future gains. The derivatives market reflects this optimism, with call options pricing Bitcoin at $111,000 by February. As retail leverage dissipates, Bitcoin's trajectory appears increasingly geared toward reaching new heights.
So we need to look at what media now. So, we see CNBC in the US is actually quite pro-crypto. So they crossed the Rubicon. So that's the kind of boomer investor generation, and they kind of get a lot of exposure to it. The real pushback is from two sources, the Financial Times and The Economist. And because they are the gatekeepers to the centralized world of finance, they are the power brokers of knowledge. It doesn't exist unless it's in the FT or The Economist has an opinion on it. But here is a world that is inverted to what they know. This is a world that came from the bottoms up, from retail, from individual investors, and not from the power brokers and gatekeepers of Wall Street. And so for them, it's a very threat to their understanding and existence. So, what people are getting exposed to is, on one side, this traditional, multiple hundreds of years old media, just endlessly snarking and cynical and terrible about it, but they kind of want the attention as well because they know there's more attention in this space than everything else. But they're seeing the world of podcast, distributed media, new media, all becoming much more focused around this. This is the battle that even Elon is playing on Twitter. It's, that there's a change of guard of gatekeepers. It's gone towards the individual and away from the centralized. And so that is a battle that had to happen anyway. It's the battle we've been having in crypto with all of finance. And we're seeing one by one, incredibly, all of finance caving in and saying, yes, this is a better system. It's an extraordinary thing that I never thought I did think I'd see, but just seeing it play out from 2013 onwards, it's been amazing the power that this thing has done. It's like a massive, supermassive black hole. One by one, everybody comes across into this new world because the returns are better, the opportunities are better, and the system is just more robust. It's just a better way of building finance and the internet. So the first one is there is an industrial savings complex whose job is to say, listen, what you need is diversification and you need us to help you manage it. It's far too complicated for you. In return, we'll give you 8 or 9% returns. But they're not understanding that their audience has changed. Their audience is not baby boomers who did pretty well in their careers and had some savings, even though the baby boomers are actually very skewed. There's a whole bunch with no savings at all. Because the system let them down too, which was their savings never equated to an ability to retire. The median 401k in the United States of a baby boomer is $150,000. They're so fucked.
Ethereum faces a challenging road to reach $5,000 by the end of the year, with on-chain options protocol derived, suggesting the probability is less than 10%. Despite significant inflows into spot Ethereum exchange-traded funds, ETF, which hint at a potential supply-side crisis, the data indicates tempered optimism. According to Derive's head of research, Sean Dawson, the likelihood of Ethereum hitting $5,000 peaked at 16% earlier in December, but has since dropped to just over 8%. Reaching $5,000 would require a 37% jump from Ethereum's current price of $3,669, a daunting climb as the year draws to a close. Interestingly, the trading of options for Ethereum, including calls and puts, reflects a balanced sentiment, suggesting a neutral stance among traders. However, pseudonymous trader CoinMambo remains bullish, reiterating their year-end $5,000 target for Ethereum and fueling discussions on social media. Amid skepticism, there are signs of institutional accumulation. On December 10, $305 million flowed into Ethereum ETF, with $202.2 million attributed to Fidelity's Ethereum fund. Ethereum contributor Eric Connor and educator Anthony Sassano view these inflows as a harbinger of a supply-side crisis, with traditional finance aggressively accumulating Ethereum at current levels. Optimists point to Ethereum's structural growth and record-high weekly closes this year as signs that a rally potentially to new all-time highs could occur sooner than expected. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.